Drop it.
Welcome to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox with the Vesta Group of Long and Foster. Michael, did you notice how slowly I said that?
Yeah, last week you were
I was very hypey.
had a little too much coffee. You said it very quickly. Speak slowly so people can understand.
I'm working on that. And I'm joined by my partner in crime, Michael.
Michael Becker of Sierra Pacific Mortgage.
And Michael, we have another special guest today.
Very special guest.
Yes, Tom Drexler, Sage Title. Tom, really appreciate you being here with us.
Good morning. Greetings.
How are you, man?
Yeah, living the dream today.
There you go. There you go.
Hopefully you all had a good Father's Day.
Yeah.
It is the morning. We're recording this the morning after Father's Day.
What did you do?
I had a perfect day. Played golf with my brother and a
Very
couple friends.
nice. Very nice.
Then took the dog on a trail walk by around Liberty.
Beautiful.
Got in and he swam again. We have a lab.
Yeah.
Whose swimming challenge is like afraid of the water, which is crazy when you think about a Labrador Retriever. They're born
Right, they're born for the water. Right. Yeah.
His sister jumps into the waves, and she's half his size because we know that the reason we got Ollie was because the person who adopted his sister, River, told us that Ollie was available.
Yeah.
But yesterday we got him out, and he was actually. I kept throwing the stick out a little further, and they finally started. I said, "You got it, buddy."
That's awesome.
So it was cool, and then. Nice dinner to what will be our spotlight tonight. I'll say that people can listen.
Good.
Save that for later.
Awesome. How about you, Tom?
Yes, it was a whole weekend of joy.
That's good.
Crabs with the kids on Saturday.
Ooh.
Loved it. And Sunday, spent it with family.
Very
all day.
nice.
Brothers, sisters, mom, whole 9 yards.
That's
It was
awesome.
good. It was a
That's
good day.
awesome. I had a really nice weekend. I mean, I wish, I can't get my daughter home all the time. Mm-hmm. It's always nice to have my daughter home. And so I got a very nice call from her.
Okay.
And then I got a call from my son-ish. I call him my son-ish because he's not my son-in-law yet, but we love him dearly. Who knows if he'll ever become my son-in-law. But the point is, he's a wonderful guy. And they, so anyway, they both called me, which was really nice. And then my son and my brother-in-law and our Aunt Julie, we all went out and had a really nice dinner. Went to Bluestone here. Not dinner, more like brunch. It was late, but anyway, had a nice brunch. Linner, something like that. And in the morning, all weekend, I got back to walking a little bit more, so that was nice. I got like 6-ish miles in on the NCR on Saturday and another 5-ish on Sunday, so...
Weather-wise, it's been a pleasant summer so far, as we haven't had any extreme heat.
Yeah.
It's cool in the mornings, gets warm in the afternoon.
Right, and I've been heading out really early in the morning,
nice.
so it's been nice, crisp, beautiful. And I'm doing different parts of the trail that I don't normally see. Like I normally used to start at Ashland and walk up. Now, I went to Whitehall and walked up to Dairy Road on Saturday, and then on Sunday I went from Dairy Road up to Bentley Springs. So there are parts of the trail that I don't normally get to see. And they've got some little waterfalls and things, so it's kind of cool. Anyway, all right. Enough with the comedy jokes. That's a Steve Martin quote. It's time for Michael.
Yes, mortgage activity.
We're going to get into the rundown.
The rundown. So let's talk a little bit about mortgage applications. According to the Mortgage Bankers Association, this is for the week ending June 9th, where there's always a delay.
Yeah.
By the time we record this, and it's always looking in the rearview mirror a little bit. But it was good news for this week. After 4 straight weeks of declines in mortgage applications, which seemed to run along with the increase in mortgage rates.
Right.
We saw overall a 7.2% increase on a seasonally adjusted basis. Unadjusted, 18% increase.
That's nice.
And remember last week it was a really bad, seasonally adjusted number on the down close. So there's still demand for people to buy homes. And then when you take out refis and just look at the purchase index, 'cause that's a lot what we talk about here, on a seasonally adjusted basis, The purchase index increased 8%, and the unadjusted 17%. So very strong week. That week, we did have a little rally in rates. The Mortgage Bankers Association said the rate ended around 6.71. I think Mortgage News Daily, what we talk about, because they have a daily update, was in the 6.9, 6.95 range.
Yeah,
That's not a huge difference when it comes to monthly payment. These are elevated rates, and the fact that there's still demand out there at these rates is generally a good sign.
At least it dropped back below 7.
Yes. Well, I think it. Well, here, let me give my prediction. So last week we had the Fed meeting. We talked about it. The Fed, usually when they speak or when they come out with their statement, and the press conference when Jay Powell gives one, tends to be bad for rates, because every little thing he says that the negative, the bond markets tend to get in sell-off mode, and we tend to have rallies after he has it. And that's what's kind of played out so far. Looking forward, there's not a lot of economic data on the horizon for this coming week. We have a lot of Fed speakers. So I'm going to say flat for the week, but with some up and down depending upon what that Fed speaker says. If you get for example, Fed chairman, he's not Fed chairman, I think he's the St. Louis governor.
St. Louis, okay, yeah.
James Bullard?
Yeah, right.
He's speaking.
Your favorite.
Yeah, it's not really. We won't go into that. He's speaking early in the week, and he tends to be hawkish, and we'll talk about inflation. I think we'll see a sell-off. But then Austin Goolsbee, who is a new Fed chairman for Chicago, he used to work, he was the head of the economic team for Obama. Mm-hmm. He seems to be a bit dovish.
Yeah.
So after his speech, I wouldn't be surprised to see a rally. And there's a few
yeah.
more speeches throughout the week. There's not a lot of economic data, and you'll see the bond market react to whatever's said in those speeches, so with up and down. So if you're somebody who needs a lock, you better have a loan officer who understands this and will lock on the dips and maybe float when things go up a little bit.
Right.
So, but overall, I think we'll be flat. We're going to need some slowing see some data showing the economy slowing. Last week, jobless claims were elevated, which was good for rates, but then retail sales was strong. Looking forward, one thing that nobody's talking about, and I think it bears mentioning now, is student loans are going to have to start being paid back in a couple months. That's going to pull a lot of
same thing's happening
cash.
in the foreclosure market, right? That prohibition on foreclosures.
Right. So that may make it. I wouldn't be surprised if that helps slow the economy from the retail sales side. And maybe people spend a little less on services, because it is that core services number, part of inflation that the Fed's looking at.
Yeah.
If people spend a little less money on that inflation would slow, and then maybe we see better rates.
Yeah.
But for the week, I think we'll be flat.
Okay. Great. All right. Well, so we'll roll into the real estate market. I have the Bright MLS data for the week ending June 11th. So again, looking back a little bit, but new contracts rebound, but we're still below the past. So the Mid-Atlantic in general rebounded from, we were, Memorial Day, we dropped a little bit. Mm-hmm. This week we were up 18.7% week over week. So that was good, contract activity. Still below pre-pandemic levels and last year's level, which was, we're down about almost 20%. And that was when rates hadn't risen past 6%.
Yeah, they were still below 5%.
Yeah, so that's why, so anyway, we'll see if there's any. I'm waiting for you to forecast a more significant drop. That would be wonderful. If that happens, maybe we can persuade some buyers that are on the sidelines to jump in, and some sellers
it's coming
on the
sidelines. It's
sidelines.
It's going to take time. If you want a long-range forecast, I think the end of this year into next year, we'll start seeing that drop. Yeah. When it does drop, it will be sudden.
Yeah, I agree. Yeah.
Okay.
It'll
be pretty quick.
Yeah, so anyway, the point you made about the applications being up, though, it's similar to what the showings are telling us.
It's amazing at these rates. If you would ask anybody a year ago if rates got to 7%, what would happen? We thought
market would have been dead.
Nobody be buying and selling houses.
Yep, and the showing activity, we're still tracking pre-pandemic levels, right? Every week since the beginning of this year, 2023 has been tracking above the 2019 levels in showing activity.
Well, that's good.
So even though, except for 1 week. 1 week we dipped slightly below 2019. Otherwise, we've been above. Now, a lot of people also are asking me pretty regularly about, when's it going to crash? When are prices going to come down?
Demand has to crash for that, and the demand's heightened. And there's demographics. We've talked about this in the past.
Right. There's too much of a an inventory challenge for prices to come
And
down.
the demographic we're
significantly.
speaking about is that
Yeah.
millennials were delayed in becoming homeowners.
Yes,
and
they
see there's strong demand from them, and now we have Gen Z,
Right.
which is almost as big as the millennial generation, bigger than our generation, Gen X,
Yeah.
is coming on board and starting to buy houses. I mean, I'm seeing applications from people born 96, 97. Can you believe it?
Right?
Yeah.
Right. Well,
So-
yeah, I just went to a wedding over the weekend with a young woman who my daughter went to elementary school with, and she bought her home 3 years ago.
Oh my goodness. Good for her.
But she just got married, and she bought her house on her own. School teacher, just super frugal, saved her money, did things the right way. But it's possible. It's possible. So anyway, so showing activity up. I'm going to give you some specific numbers.
Do that.
Let me get to the Baltimore Metro. Showings year over year are down 12.7%, but as I said, overall, we're still tracking above pre-pandemic levels, and we're up 1.8% from the previous week. New purchase contracts down 18.5 compared to a year ago. Again, these are all, when you compare against the crazy years of 21, 22, it's a tough comparison.
Sure.
So everything's going to look down. But we were up 15.2% over the previous week. Median time to the contract, about 11 days. That's unchanged from a week ago. And then new listings are down, here's the painful one, 27% from a year ago. But from a week ago, we were up 2.5%. And that's seasonal. We start to see more listings as the spring and summer go on. And toward the end of the summer, it'll start to wane again. So, and then median list price, we're at about $375,000, over 2.7% up from last year. Little scunch down from last week, so we were down 1.3% from last week. But overall, that's not a trend. So anyway,
So what is a scunch?
a scunch, yeah, that's a very
We
scientific
need definitions
term.
here.
Yeah.
It's a scientific term that means a scintilla of no. I don't know.
It's a word that I can relate
small
to.
It's a
amount.
scunch. Yes, right. A little bit.
A little.
Yeah.
So I'm
Anyway.
interested in your view on this, because clearly the lack of inventory is tied to the higher interest rates.
Yeah, golden handcuffs.
People who have low interest rates on their current mortgages don't have any incentive to sell when they're going to be jumping up into a much higher interest rate.
Right.
I'm assuming someone has calculated an interest rate at which those people who are holding on to their current properties are going to be willing to sell. And once we do that, then we create the inventory and we're kind of get back to normal.
That's a great question. I don't know that I've ever seen a survey. We speculate, Brad and myself,
Yeah.
will speculate as to rate in the low fives, high fours would probably make a difference. They don't have to get down as low, given the amount of equity people have. So if somebody's selling and downsizing may be able to pay cash or have a very
It may not
small
matter at all
mortgage.
to them.
So,
right.
Something in the 4 or 5s may not matter. Because it's going to be hard. I don't know that we'll ever
It's
get
the
to...
discretionary move-up buyer that's going
Yeah.
to be constrained more than anyone else.
Yeah.
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 Well,
And those people, I agree with you, Michael. If you get into the low fives,
Because
upper
we certainly
fours,
will need inventory. Because the problem with rates, if rates were to drop drastically, like right now,
Yeah.
it would make the demand increase without any supply and just make it worse. Because it's still a challenge for first-time home buyers out there who have to go through multiple offers to try and find somebody who will accept theirs, even though they're going over list. Having escalation clauses, waiving appraisals, having appraisal gaps. Lots of these things are still
I was
happening.
just talking to the same wedding. I was just talking to a young couple, and they're working with a good friend of mine. We were talking about their experience, and they said, "Yeah, we've written 7, 8 offers, and we still haven't gotten anything." And I get it.
Do you foresee that we'll get to that level of interest rates? Low fives, high fours?
I definitely think so. It's so the core services and a lot of rent inflation. Everybody's predicting that it comes down. I definitely think so. I see it doing. I don't know. It might be tough to get into 3s, but it could if we have a recession and recession slows. The Fed will cut interest rates pretty quickly. Long-term rates will drop before the Fed. They'll realize the market tends to be 6 months ahead of what the Fed does. So the bond, like a 10-year Treasury is what everybody looks at for mortgages rates. It's a good indicator of where they are, and that yield may drop. To give you an example, right now, the 2-year Treasury, which kind of follows what the Fed's doing in the federal funds rate, is right around 5%. 10-year Treasuries at 3.75%, right around that. So we have it's what's called an inverted yield curve. Short-term Treasuries should yield less than longer term because you want, for the duration, it makes more sense. If I'm giving you money for a longer time, I need a bigger return, like a CD. The longer you buy a CD, the higher the interest rate is.
Right.
So markets will anticipate Fed pausing and then eventually cutting on the long end, and you'll see an improvement in mortgage rates at a time. I think it's going to take into next year. It's going to take a while. This economy is a little more resilient than people thought, but the Fed, early this year, the markets were pricing in a Fed rate cut. They've stopped doing that. The Fed said pretty much we're not. In fact, their dot plot from last week's speech said there may be 2 more rate hikes, where this is just a pause. We may hike in July, depending on the data that comes in, and that's why we're very data dependent. It's been sticky, the inflation, and the issue I see, well, there's multiple issues. One issue is just the enormous amount of stimulus money that's still floating out there. 4 stimulus bills, deficit spending to the tune of $8 to $9 trillion. That's a lot of money that's out there that's still floating. Now that will start waning, and that's when I think inflation will come down, and we'll see an improvement rate.
All right. Well, great. So when we come back, we're going to jump into our segment called The Scoop, and that's why Tom is here. We're talking this week about Behind the Curtain, the role of title companies in home buying.
I like that.
Yeah, well, it's like the Wizard of Oz. So so we're gonna hear more from Tom in just a bit.
Try it.
And we're back to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox with the Vesta Group of Long and Foster, sitting across from
Michael Becker of Sierra Pacific Mortgage.
What's up, Michael?
Not much. How you doing, Brad?
All right, and we've got our guest, Tom Drexler with Sage Title. Hey, Tom.
Greetings again.
Hey, man. Really happy to have you here.
Yes.
Here's the thing. Buyers in the state of Maryland, they're given the right to, by law, to choose the title company that they use.
Why do you say that? Why do you bring that up?
Well, I think it's an important factor because a lot of times you go look at a listing. You can see them right in the listing. Seller prefers, well, it doesn't really matter who the seller
Well, not only sellers, but also the agents.
The listing agent, right, sure.
And the buyer's agent representing that they may have somebody they like to use, but you're right.
Right. So buyers have their choice. Mm-hmm. It's important. Who you work with matters, and you want to have a good experience. Well, so today what we want to do is try to pull the curtain back. We talked about the title, Behind the Curtain, the role of title companies in home buying. So we want to pull back that curtain, reveal the Wizard of Oz. Tom Drexler is the Wizard of Oz, right? Pay no attention to that man behind the curtain. But anyway, I'm going to be Toto. I'm going to drag the curtain back. And then we're going to...
As long as I'm not Dorothy, I'm okay with that.
Yeah, well, you can be the Scarecrow. No, I think you got to be, I don't know. The Scarecrow. Well, no, the Scarecrow had a brain later, so it was much better. Anyway, so Tom, people get that choice. We're going to talk through some of the things that title companies do to help people understand why that choice is so important and what's going on with, in general, that whole process that I think most people just have no clue about. They just, they're working with their agent, they get a property under contract, and once it's under contract, they say, well, so now we're going to turn some things over to the title company, and they're going to do their magic. Well, let's talk about what that is.
Okay.
All right. Okay, so, Tom, got a bunch of questions for you.
Well, before you go there.
Yeah.
No, I think your first topic that you brought up is actually really important, and I don't want to beat it to death. But if you look at the number of title companies in Maryland, there are tons.
Oh, yeah.
title companies tend to spring up when the market's good.
Yeah.
And they shut their doors when the market's not. There are a number of title companies that have been in this business for a while. I've been in it for over 20 years now, and I've seen the good and the bad. And there's a lot of really good title companies out there. People who wake up every morning, this is their business, they do a good job, they've been around for a long time. And so why is it important that you select a good title company and use that right? And that is because, well, if you do enough research, you can see that a lot of people who ran title companies are in jail. There's a lot of money that we're handling. Sometimes that just lends itself to things, bad acts on behalf of the people that own those and run those title companies. But more importantly, your home is going to be something you're owned for a while. And if something happens down the road and you need to get back in touch with that title company, unfortunately, many of them shutter their doors as soon as the interest rates go in the wrong direction.
Sure helps to have someone. Sure helps to have someone around who has been around and will continue to be around.
Yeah. So I don't want to just gloss over what I think is probably one of the most important decisions. Certainly, a more important decision is who's your real estate agent and who's your lender. But it is really important to choose a title company that has some longevity in the market, that has some notoriety in the market and of delivering competent services, because you may need to rely on them later. And then lastly, this is really complex work. Working on title issues, which we'll talk about today, you want to make sure that you're using a title company that knows what they're doing. So I don't want to gloss over what I think is probably one of the big three questions: who you're going to choose to help you through the home buying process.
That's beautiful.
Well said.
Well said. Yeah, absolutely. Thank you, Tom. All right. So I'm going to jump into some questions for you. And the first one is really just kind of a set the stage, right? Let's frame this conversation. Let's talk about at maybe a 50,000 foot level. What's the process? Like I said, when you get, you work with a realtor and you work with the lender, you get your pre-approval, you get under contract. We're going to turn things over to the title company now. So from the moment a title company receives notification all the way through to the end, what's that high level kind of view of what that process is like?
Well, I think your analogy to the Wizard of Oz is spot on. The reality is for most buyers, you may have had a phone call or an email from the title company, but generally you're just going to show up and they're going to show you where to sign documents.
Pretty much.
Yeah, and then the curtain closes back up. So it is kind of important to know that all title companies offer three main lines of service. The first is title services, the second would be closing services, and the last is escrow services. So most title companies out there are all going to offer the same three services. Some are better at others than others at these services. But as far as title goes, the contract that's signed to transfer the property requires that the property be free and clear, which is the standard. But if you look at the contract a little more deeply, it's basically, is the title insurable by a title insurance company?
Yeah.
Because keep in mind, there's no lender that's going to lend on a property unless they can get this product called a lender's title insurance policy.
Yeah.
Also, most buyers won't buy property unless they also can get an owner's title insurance policy. So the first step is we're going to open up a file. We're going to analyze title. Is it free, clear, and insurable? If not, can we resolve some of the issues here? But service number one just involves getting that title to the point that we can insure it and move forward in the process.
Yeah.
The second service that we offer is a closing service. So most people are going to obtain a loan, and so we're going to get the loan documents. We're going to prepare the deed of transfer. We're going to prepare affidavits of title that the seller will sign. So there's a lot of documentation that we prepare and we gather from other sources, all to the end that we're going to meet around a table at some point and sign some legal documents to transfer the property from the sellers to the buyers.
And can I stop you right there and just say that there's a lot to that you just mentioned, that service at the settlement table that's so important. I've had I've had, let's just say, numerous closings with you. I've also, because a buyer may choose another title company, had experiences with other title companies from time to time. I have to say, bar none, that the experience has never been more professional and pleasant, and just the right note between being overly,
robotic, business-like.
right. It's great information that you share.
Yeah.
You don't overburden people with unnecessary detail. And that experience is always, I have buyers regularly who just rave about what that process was like at the settlement table. So kudos, Tom.
Well, thank you. You
Golf clap.
You left out those intermittent title jokes.
Well, they're the best. It's like dad jokes, but in title. Right.
Yeah.
Yeah.
Yeah, it's a step below dad jokes.
Yes, I was going to say that.
Title jokes. There you go.
Yeah.
But thank you, Brad. So, within the closing, that is our opportunity to meet with the buyers. And so we do have a very limited time with them, even though we've been working for them a substantial period of time leading up to the day of closing. But I think it's important for all buyers to remember that the work of the title company is only partially complete at that point. We then go through the process of making sure that all of those documents that were signed at closing are properly processed. And the main part of that processing is going through the recording process. And depending upon the jurisdiction where those documents need to be recorded, that's not always an easy process. And
Thank you, Baltimore City.
Yeah, ransomware.
We find that a lot of title companies, I mean, I literally got a call recently from a gentleman who said, yeah, I closed 20 years ago and the title company never closed the deed or never recorded the deed. So creates a big problem now that the title company is gone,
no longer there,
and it's just his word against some other people that he owns the property. Although he's been using the property for 20 years, there's no deed recorded. So yeah, it is important that everybody needs to understand 100% of our income is earned at that time of closing, but yeah, we still have all this work to do, and a lot of title companies over the years have not done the work they needed to do to get the rest of that done.
Yeah.
So the last service that all title companies provide are called escrow services. At closing, the buyer doesn't write a check to the seller. The buyer's not writing a check to pay off open mortgages of the seller. What happens is that title company amasses all of the funds needed for closing. So the loan amounts, the earnest money deposits, things like that. And they all go on a settlement statement, and then we go through the process after closing of dispersing the funds that we've collected. So those are the escrow services. So it is important to realize that all title companies are offering those three services. They all seem very homogeneous as far as the services that they offer.
Yeah.
So while that is what it seems like, the competency at which title companies perform those services vary greatly in the market. Again, the Sage Title, I think, is an excellent top shelf title company, but there's a lot of them out there that do a great job. They're committed to our industry, and they have my respect and honor. And I think buyers need to make sure that they do carefully select a title company.
Yeah. Well, and some of the points that you raised, in the very beginning, just about longevity and that kind of thing, they're so important and absolutely things that people should look for when they're choosing. So, all right. So you mentioned doing this title search. How's that process done? Like what sources do you use? What services do you use to check on that property's ownership history? And then I guess you're looking for things that are, hopefully you don't find any problem.
So that's a great point, and that's a great question. And I think that the first thing we want to make sure is that everything we do gets recorded at a courthouse.
Yeah.
Right. So within the world of real estate, all deeds and mortgages are recorded at the courthouse. It's also important to realize that real property or someone's home, there can be liens against those properties. Mm-hmm. And liens come in one of two types. There's either intentional liens like a mortgage. So at the time we bought our property, we took a mortgage. The mortgage is recorded. It serves as a lien against the property. What that lien means is there's someone who has a monetary interest in that asset called the real property.
Yeah.
But unfortunately, there are also unintentional liens. So if someone gets sued, so they didn't pay their credit card and they got sued, there's a judgment that's entered. As long as that's properly enrolled, it also serves as a lien against the property. And so we see other examples like mechanics liens. You've hired somebody to build your home or to put an addition on your home,
Sure.
and you didn't pay the contractors. They could file what's called a mechanics lien. And so that's just scratching the surface. But all of that is recorded at the courthouse, and you have to know how to go into the courthouse and look at those different indices. So that's what we do. Now, most title companies have what we call an abstractor. An abstractor is someone who's actually walking into the courthouse, pulling out the indices.
Right.
We're checking them online. We do have some online services available, but they will prepare a report for us, an abstracting report, where they've gone and they've looked back what's called a chain of title. So we're pulling the deeds, we're looking back through each deed, we're checking the increments of ownership for breaks in title and liens. But at the end of the day, that abstractor will provide us a report to ascertain whether that title is insurable. And I think that last phrase is probably one of the most important things. Again, we're looking for not the absence of title defects. We are looking for an insurable title.
Yeah.
And here's an example. So we might have an open mortgage that has never been released, but it's so old that it's outside the parameters of somebody being able to sue on it.
Yeah.
So while it is technically a title defect, it is something that we can probably insure over. But our goal here in checking those courthouse records is to make sure we have insurable title.
Yeah. Okay. Good. So say an issue comes up. What steps do you take to resolve any of those issues that may come up? Like, just to ensure that seller has the legal right to pass it and that the buyer can buy it.
Yeah. So there's two main issues that we're going to see in most title reports, and those would be unreleased liens or breaks in title.
Yeah.
Right? So unreleased liens, we may have a mortgage that's been paid off a number of years ago, but the lender never filed a release.
Yeah.
Generally, what happens is we've discovered that lender has gone out of business long ago, or they've been purchased by another lender. We have services that we subscribe to. We can find the current iteration of the lender. We can go back and ask them to file a lien
Lien
release.
Right.
Yeah, and so that's very helpful. Sometimes we just have old judgments, and so we need to make sure that those judgments were properly released. Now, I should stop here for a moment, because one of the most difficult things that we do is deal with the indexing of judgments when someone has a common name. So it's a little different if we have Tom Drexler,
John
which
Smith.
is a very unique name to search. But John Smith, as you said, we can spend hours trying to clear those judgments. And when I say clear them, we have to verify that judgment against that John Smith is not a judgment against our John Smith.
I see it come up all the time when somebody's a junior or senior.
Oh yeah.
That's that comes up all the time, and that's my dad's. Like, I'll be dealing with junior, and he may not go by that, but that's what he was. And somehow the judgment attaches to his name. So.
Yep. Absolutely.
Yeah. So we have the big task of making sure that's clear. Now, another problem of all of this is those indexing systems aren't perfect. So we have clerks at the courthouse who are typing in the names. It's very easy to mistype a name or misspell a name. Now, thankfully, when my abstractors or most abstractors are going through the process, they're going to look for different spellings of names and things like that. But honestly, a misrecorded judgment can stay out there as a lien against the property because it was misindexed or the name was typed in wrong. We see that very often.
Yeah.
And so we do have this big task of making sure we're trying to clean all those up. But you asked about what are the two main things. We're looking at liens and we're searching those names. We're searching different versions of those names. But we could also be looking at title breaks. So we want to make sure that we've gone back and, because people die owning property, you want to make sure that their interest was transferred, that interest didn't remain inside of an estate where an heir can make a claim against it. We also need to be aware that a lot of times we have property owned by an entity. We have to go back and make sure that was properly formed.
Yeah.
That the people who were in charge of owning that or conveying the property within the confines of the entity itself had the proper authority to do so.
To sign, right.
Right, to sign. So we're checking all of that out to make sure that there's no title breaks. Now, when our abstractor does find those, what tends to happen is the file ends up on my desk because it's a problem. And I've got to start making some phone calls and working through the title issues.
And I've been the recipient of one or two of those phone calls over time. Yeah.
Yeah. Yeah. And sometimes they're not quick.
Yeah.
And then sometimes it's very involved, and sometimes I think it's going to be very involved, but it works out very easily. So,
oh yeah, we had one of those situations where we had a seller. I represented the seller, but they had a garage that was really nice 3-car garage, big, roomy 3-car garage, full electric, everything, that they had built in a utility easement. And the buyer, when they were made aware of that, said, I don't care. We were worried. We were convinced this is going to be a big issue. Might have to tear down the garage. Might have to move, Buyer didn't care. So, and they were fully informed. They were, we explained the situation. Tom did, not me. But yeah, we were shocked that went through, because now that particular property, the likelihood that utility is ever going to exercise that easement may have been pretty small, but it was a utility easement, so could have been a major issue. Yeah.
Yeah. Well, you bring up kind of a sideline here. I didn't want to go down the rabbit hole that far, but when we're doing our title work, we do find these things called easements, which is someone else's right to use a homeowner's property.
Yeah.
So they can come in the form of a utility easement, but can be also a driveway easement.
Shared driveway is very common.
So those are in part the job of the title company to make sure that we're looking at those. And then also in your example, you brought up another issue that we have to deal with quite often, and those are survey issues. So part of the process involves ordering a survey. Now, it's not a stake survey, which I think most of the listeners would be familiar with, where you spend thousands of dollars for a surveyor to go out and locate those property corners and bank stakes into the ground. We don't need those in the transfer of real property, but most of the time we order what's called a location drawing.
Yeah, a buyer could elect to have one of those if they wanted to, but most don't.
Right.
Yeah.
Most of them just elect to have what's called a location drawing.
Right.
We also call it the survey, but that's where relatively inexpensively a surveyor will go out and maybe for $200-300 they will site the lines of the property to make sure everything's located within the property boundaries and that there are no encroachments onto or off of the property.
See that a lot with sheds, with fences, things like that. Yep.
And sometimes they're minor stuff like a fence meandering or a shed that's kind of meandering over the line. And my job is just to say to the buyers, look, you don't have to move it. You can buy the property the way it is, but you need to know this is where your line is, and your neighbor may want one day ask you to move your shed.
Sure.
And they would have every right to do that. But then we also have showstoppers where we've talked about the garage. We've actually had them where the garage was built off the property line, and we had to resolve that. We've had that on many, many occasions where people build their own additions and things like that. So we have to know how to handle those and resolve those generally through some kind of easement agreement with the neighbor and things like that. So again, this... I think your analogy to the Wizard of Oz and the curtain, is very apt here, because most buyers don't want to know the boring nature of what we're doing behind that curtain.
And most of them never encounter these things. I mean, they happen frequently enough that, that's why title companies are there. But most people don't encounter major issues. It's just when they do,
Right.
whew, yeah, it's
Yep.
important.
Yep.
Okay. All right. So we kind of skirted this issue a little bit, and I don't want to get too far down the rabbit hole, to use your analogy. I mean, we're mixing our movie metaphors because we're doing Alice in Wonderland and The Wizard of Oz. But, or it could be, to use a more contemporary reference, it could be The Matrix down the rabbit hole. But anyway. But title insurance, you've mentioned that one of your main goals is to ensure that the property is insurable. Ensure that you can insure the property, right? So there's different types of policies available. They cover different risks. Can you kind of give maybe just a 50? Because we want to have you back, honestly, at some point. I think title insurance is so important. Maybe we want to even do a separate episode on that and do more of a deep dive. But just high level, there's a couple different levels, things like that. What do they cover?
So there's two basic policy types. One's called a basic policy. That tends to be issued on most commercial transaction. The coverages in there are not what most homeowners would want. So the industry did create a residential homeowners policy, which has more expanded coverages. The most famous one is going to be for coverage for appreciation of the property.
Yeah.
Keep in mind, we don't know when a title claim could come, so down the road your property's worth a lot more.
Right. Could come down. You could hear about it 20 years down the road.
Yeah. That residential policy is going to cover you at the higher amount. Most insurance companies cap out at 150% of the original purchase price would be your limit. So what you would see in most residential closings is that the residential policy is going to be issued. There's about a 17% differential in the pricing between the commercial. It's a little bit cheaper, but that insurance company is not insuring the appreciation of the property. But you asked what it covers. So let me just go back a little bit. Title insurance is unlike all other insurance products. It's paid at the closing table.
Yeah, one time.
And the policy covers the homeowner the life of the time they own the property. So there's no continuing premium, things like that. That one policy will cover them for the life of the time they own the property. So we talked about title defects. Believe it or not, this happens kind of regularly, is that somebody will come back and say, hey, the estate wasn't properly administered, so the heirs have a claim, or there's a lien against the property that wasn't properly addressed in the process. Maybe it was misindexed. Those are the times that you're really thankful that policy is there. Whatever happens in a title defect, they're expensive from an attorney's fee standpoint. So the policy will kick in, cover 100% of attorney's fees, but more importantly, if there is a loss, again, we talked about that increase in value of the property, it will cover the property for the appreciated value up to 150%. So we talk about the value of that policy. It's really one of those, I get to sleep at night because I don't need to worry about it. I have a large insurance company standing behind me. But one of the real true benefits, probably the largest benefit of a title insurance policy, it guarantees that automatic resale of the property.
Yeah.
Almost no one has a pristine title. There's always some glitchiness that the insurance company is insured over before, because we want to get that property back on the market. We want to get it resold. So the insurance company that already took that risk will now agree to indemnify the future insurance company who's going to take the risk again because there was some glitch back there. So again, this is stuff that happens behind the curtain.
Right.
We're transferring some property with some glitches in it, and the reason why we're able to do it is because that current owner obtained a policy of title insurance. So probably one of the largest values of having that insurance is that guaranteed resale.
Yeah.
So I do have, over the years, somebody called me and said, well, I spoke to my uncle, and my uncle said title insurance is a big scam. I don't need to spend that money. And
it's technically, legally, it on the contract, it says optional.
Well, it's not only that, it says it on the closing disclosure.
Yeah.
Yep. It is. So it is technically optional. Yeah. I will say, I've said to my buyers, look, I don't make any more money whether you buy that title insurance policy or you don't. So financially, couldn't care less. Doesn't matter to me. whether you buy it or you don't. I care what happens to you, so I'm encouraging you strongly to consider buying that title policy, because I think you'd be putting yourself at a major risk if you don't.
Right. Yeah, I couldn't agree more. I have had a lot of conversations with these folks. Some people say, well, it's optional, I don't want it. Some people are under a misimpression that because it's a condominium or maybe because it's a recent build, that there wouldn't be any title issues. And so here's the real news, is that title issues can stem through the entire chain of title. We're not worried about just current ownership.
Right.
We go back and we're checking individual ownership. The joke is the claims go back to Native Americans, and that is not a joke. It is actually true. Now, I believe in Maryland, have had one Native American claim against lands. In New York, it's probably a lot more common. But yes, that title insurance policy is covering not just decades, but centuries of ownership of the property.
Yeah.
And so it's really important that we're not just insuring that space between the building of the new home and today. We're actually insuring backwards for the life of the time that has been property. And while it's certainly sufficient to say that a claim back in the 1920s is probably not going to be pursued, it has been pursued before, but it's a long period of time.
Yeah.
Everybody should also realize that in every courthouse, there's a period of time that they're not up to date. In some jurisdictions, that could be months. Most jurisdictions,
COVID had a
3
big
weeks to month.
impact on that.
Yeah,
Sure.
And we're insuring over that as well. There's things happening at the courthouse we wouldn't know. So this product of title insurance, I'm happy to say that probably 98% of my buyers buy the policy. Those that don't tend to fall in a couple of categories. One would be a short-term investor flipper,
Right,
who says, okay, I'll just run the risk that no one's going to come out of the woodwork over the next 6 months while I'm getting ready to resell the home. But thankfully, for the most part, I think there's enough out there on the internet. In fact, if anybody wants to do some research, the Maryland Insurance Administration has a great primer as to what title insurance is and what you buy,
Yeah.
why you buy it.
Right.
And it certainly takes any self-interest out of the game. They're just an entity of the state of Maryland that is charged with overseeing title insurance companies, and they've actually written a very nice piece that explains what it is and why it's important you have.
Yeah, we'll probably put a link. I like that. We'll probably put a link to that document in the show notes, so everybody will have a copy of that. But that's great, Tom. Oh, and then there's also that alternative to title insurance, which is your real estate agent who tells you don't need to buy title insurance. I'm joking.
My eyes
but,
got real big there.
Dude, there have been agents who've said to their clients, you don't need to buy, it's optional. You don't need to buy title insurance. And what have they just done? In effect, they've probably insured that property for their buyer, because guess who that buyer's going to sue if something happens to their property down the road? Yeah. So, folks, if you've got an agent who's telling you you don't need title insurance, maybe ask around a little bit more. Yeah. All right. So you mentioned the third role of the title company was the escrow.
Escrow service.
Right. So how do you handle all that? What safeguards are in place? Like, that's a lot of money that gets handled. Yeah.
So for a reasonably sized title company on any given day, they can have millions of dollars in their escrow accounts.
Right.
And that's because the lender on the day of closing is funding the loan. There's a lot of money coming in and out of the accounts. What folks need to know is that probably one of the biggest areas of fraud right now in the United States is defrauding title companies and defrauding people in the real estate process.
I'm glad you mentioned that.
Yeah, it is on almost a daily basis. That buyers of homes get emails purporting to be from their title company, purporting to be from their real estate agent, but suggesting that
Here's your new wiring instructions.
The wiring instructions have changed. This has been going on for quite a bit. A lot of buyers of homes have lost hundreds of thousands of dollars as a result of it. And so it's important that we as an industry, and I think we've done a good job, get out to buyers to say a couple of things. Number one, beware that this is an issue. But number two, and just as importantly, most of us have now set up what we call secure portals.
Yeah.
Title,
Things aren't passed via email anymore. Yeah. They're sensitive documents. A lot of them they have their social security number on them, things like that. You can't pass that stuff over email.
Yeah. So one of the things that you would get fired for in my company is if you emailed out wiring instructions. Those have to come through our secure portal. There's a security process to get into the portal. We always urge our buyers to make sure you're calling us at a number that you can verify on the internet as our general number, and verbally verify those. So it is important. We take great care to make sure that we're protecting people's money.
Yep.
Thankfully, we've never lost anybody's money. We take great care to follow our steps and our protocols, and that may involve some extra time on behalf of the buyers, but it's important that we do that. On the flip side, we want to make sure that when we're wiring money out, we've actually had fraud. We've received payoff statements from lenders that had phony wiring instructions.
Ooh, really?
Yeah, we as a company have received that, and thankfully, because we go through such stiff protocols, there were people who checked that and figured out we were almost the target of fraud or the victim of fraud. So it's really, really important that we as an industry recognize this is a big problem. It does begin with people having unsecure or insecure emails. A lot of the Gmail accounts and the Yahoo accounts, they're subject to being hacked. And so,
multi-factor authentication is an important thing.
Yeah. So people out there who are hackers are just looking for certain buzzwords in the email process. They're looking for realtor, real estate agent. Once they know somebody's involved in a real estate transaction, they're going to monitor those accounts, and next thing you know, you get an email purporting to be from Brad Cox saying, hey, the title company just changed the wiring instructions. So the whole escrow part, I'm glad we're not glossing over it, because it is profoundly important that we recognize how important that you're using a good title company who is aware of and has those protocols in place.
Yeah.
The last part about all of this, people usually get a little frustrated when I tell them that they need to send us a wire for their proceeds, and they're like, well, why can't I just give you a check, or why can't I give you a certified check? The reality is the check forgers have gotten so good today, and I've actually held a fake certified check and a real certified check side by side, and most people wouldn't tell the difference.
Yeah.
So today there's an extra long hold on those checks, and we can't disperse until those actually become good funds. Wiring is the only real secure way of having immediate funds at the time of closing.
And as long as you follow the procedures that you've mentioned here, and we talk about that too when they sign the contract, there's a fraud statement in there, and we go over that, and we make sure we explain that to people. If you get an email from anyone and it says the wiring instructions have changed, that's stop, drop, and roll. That's don't do anything.
I generally, any email, if they have any questions about an email from, because there's 3 people working from the title, there's the agent and myself, the lender. If they get an email from somebody and they're not sure, just always call
and I always say, look, you know how to get a hold of me. You know my number. If you have anything that's even remotely questionable, call me, and then we'll figure it out. Yeah, good. Well, thank you. All right, so documents, paperwork. There's a lot of stuff that gets signed at the table. Now, it's kind of funny, right? You get normal closings, people are financing, right? And you have quite a stack of documents, mostly because somebody sued somebody at some point, and so there's a new document. But there's quite a stack. And then I had the other day a cash buyer, you remember, came through, and the stack was much shorter.
There's no lender documents.
Yes, there's lots of lender documents. So what are some of the things that people sign at the settlement table?
Well, the most important documents to sign at the settlement table are the deed. The deed is the document that's going to transfer the property from one party to the next. If they take a loan, the next two documents that are important are the note. The note is the contract to repay the bank the money that's being lent, and the mortgage document, which we call a deed of trust. That's the documents recorded at the courthouse. So the actual important, really important documents that get signed are just those three. But as you said, because of the importance of the process, there's all these other documents that get signed to support the process. So in the loan documentation, buyers are signing off on a loan application to verify the information is still correct. They're still gainfully employed.
Right.
They
Didn't go out and buy a boat. Didn't go out.
Yeah.
All those things. Yep.
They sign up numerous other documents to verify their intentions to use the property as their principal residence. And then
Because there's tax benefits to that.
Right,
Yeah,
right.
sure.
And then there's a lot of other documents that are more compliance documents because, either at the federal level or the state level, there's a new law that was enacted that says when a borrower takes a loan on residential property, they must, they're subject to this act, that act.
Right.
And so, but most of that stuff is just the fluff stuff. On the non-loan document side, the title company is very often having the seller sign affidavits that they're not aware of any title defects. Those are required before we can issue the title insurance policy. We have some compliance documents from a tax standpoint. There's a foreign investment
FIRPTA.
law, FIRPTA. We have to have compliance documents signed for that. So, but when it all comes out in the wash, the three main documents that we're talking about is the deed, which transfers the property, and the note and the deed of trust.
Yeah.
And the rest is just there to support those main documents.
There you go. Okay. So you talked about the deed transferring. That's in effect the document that transfers the ownership, right? So you've got to transfer that ownership. You also have to make sure that the people who are selling and the people who are buying are who they say they are, right? So what steps do we take to verify that all that passes that way?
Right. So at all closings, we're going to insist that the buyers and the sellers have proper identification.
Yeah.
And so we go through a process of not just insisting that, but the documents that, the main documents, like the deed and the mortgage document, will be notarized by a notary. Most times, the person who's conducting the closing is also a notary. So we go through a very intense process. We make sure that we're looking at the signature on the form of ID. We're making sure that it's not expired. We have to fill out a lot of paperwork to confirm that we've done that. Today, we have a lot of buyers and sellers that think they should be able to do everything on the internet. They want to remote sign things. Some of that is possible today. Most of the time, we still prefer to watch people sign using an ink pen.
Right.
But there is a possibility
Remote.
that we could do a remote closing. And those processes are designed to make sure we're still ensuring we're dealing who we're dealing with.
Yeah.
So just a quick side story. One of the things that we've been getting a lot of bulletins about recently are vacant lot scams.
Oh, yeah.
Vacant lot scams. So I actually got a call about 2 weeks ago from a gentleman who said, well, I own a vacant lot in Timonium, and I was the grass was getting high, so I threw my mower in the back of my car and I drove over it because I didn't want to get fined by Baltimore County. Because I got there and there was some contractor there getting ready to pour a foundation. And he said, what are you doing? He said, well, our buyer bought this property. We're about to build a home on it. He said, well, this is my property and I never sold it. Getting back to the importance of the verification, the title company that closed that deal, this was the way the scam works. Usually the seller calls at the last moment and saying, hey, we had a tragedy. I've got to go to New York or I've got to go to New Jersey. Send the documents up to me. We'll have them notarized and sent back to you. And lo and behold, got the documents back. And
Looks notarized.
yeah, looks notarized. It was notarized.
Yeah.
And but it was a scam. So we always have to be, here I'm not sure whether that title company actually had copies of the photo IDs, but at least for me, I always insist that I got photo IDs, even though it was not notarized by me.
Yep.
We're going to take some extra steps to make sure that the people who are signing are indeed valid.
Wow. Wow. Okay. Yeah. Never a dull moment. Okay. Well, all right. So then you talked about, the stuff that happens after settlement, right? The recording, the filing process, all that kind of stuff. What's your role there? And then how do we ensure, like I know for a while, Baltimore City, they went through challenges when COVID hit, and then for a while there, half of their department retired, and so things weren't getting recorded, and in fact it was taking 6 months, sometimes 3 or longer, to get a property recorded. So what's your process in that? What's your role in that process, and how do you follow up? How do you make sure that things are happening?
Yeah, historically we would use a service, a hand recording service.
Yeah.
Now technically we could mail the documents down, we could FedEx them down, but all documents go through a process. There's usually 3 to 4 stops at any courthouse to get them recorded. You got to go past the Department of Finance, and you wind your way around. You ultimately end up at the Land Records Department. But that deed and the mortgage has to be stamped at every section, and so having it mailed down is probably just not workable. So we would hire a service to do that. Recently, over the last couple of years since COVID, almost all jurisdictions have allowed now electronic recordings. And so for many of the recordings today, we're going to use just we'll go through the electronic process. But still, that document's got to go through a number of processes to ensure that it's properly and fully recorded. At the end of the day, that could take, depending upon the jurisdiction, we talked about Baltimore City and their struggles down there.
Right.
It was taking months.
Yeah.
Now we're down to maybe 1 to 2 months. Outside jurisdictions, we're talking about 3 weeks to 5 weeks to get that fully recorded and get verification that it has been recorded. But again, we talked about that one gentleman who the title company never ensured that the document was ever recorded. This is just as an important task for the title company as all the other tasks that we do, and that is to get everything properly recorded.
Yeah.
And very often we get rejections because the deed wasn't right, this wasn't right, there's a lien out there from the government that we needed to clear up. We will get rejections on those, and it's important that we immediately follow up and get those documents on record.
Yeah. Good. Okay. All right. So timeline-wise, I mean, one of the big things that cash buyers always say is, "Oh, we can close super fast because we're a cash buyer. We don't need to go through the whole process of dealing with loans, whatever. We can close in 7 days." That can be a little bit of a crazy, mad dash, but what's a reasonable, normal amount of time that it takes to get through that process?
That's an excellent question, especially for the cash buyers who want to make their offer look a little bit better for immediate and quick closing.
Yeah.
The reality is we're going to need to get a couple of pieces of information before we can actually be ready to close. One would be the title abstract. Mm-hmm. We need to create a binder.
Yeah.
And the second would be to get a lien sheet from the jurisdiction that requires those in order to record the deed. So with regard to the abstract and free and clear title, for our company, we have internal abstractors. Yes, I can call them and I can get my abstract fairly immediately. Once that comes in, I call my underwriting department and say, "Look, I got this major rush. I need you to push that through."
Right.
So usually within a couple of days, I've got a binder. And when you say binder, we're talking about a commitment for title insurance. That's kind of the gold standard of what we're aiming for.
Yeah.
Assuming there's no title defects, so there's nothing I need to work out, from my end. Title-wise, I'm ready to go. And so within a couple of days. The problem is that I really can't record a deed until I have what's called the lien sheet.
Yeah.
And so most of the counties that issue those are going to be taking 2 to 3 weeks to get those to us.
Sure.
And Baltimore City
had some challenges with
months, but I think now Baltimore City's maybe about a month to get that.
Yeah, it's been a vast improvement.
Yeah, vast improvement over the last few months. They've done a great job in resolving their issues down there, but they're still a little slower than the outlying jurisdictions. The reason why that lien sheet is so important is that is going to tell us whether there's any municipal liens that need to be paid. So what are those? Well, famously, we're talking about taxes. Are those paid? Water bills, things like that. But, if somebody didn't, as we were talking about, cut the grass and they got issued a fine, that's when those things are going to show up.
Right.
So almost no title companies are willing to close until that comes in.
Yeah.
So people offer, we can do a week settlement. It's a cash deal. Yeah, they're ready to write that check in a week, but the title company's probably not going to be ready. I'd say 2 weeks to 3 weeks is a comfortable time. If there's a loan involved, we may be talking about 4 to 5 weeks. But yes, we've all, under special circumstances, been able to drastically move up those timelines in that way. But I would say this is important work. It shouldn't be rushed.
Right.
And just because a buyer wants to make their offer look better than they can close in 7 days is not a good reason to rush work that really needs to take a little bit of time.
Yeah. Agreed 1,000%. Okay. So I want to wrap things up with there's some head scratching moments that we encounter in this business, and Tom, I know you've seen quite a lot, your fair share at least. What's some of the weirdest stuff you've ever seen happen, like title wise? What kind of stuff have you run across that's just been holy cow?
20 years of doing this, I could bore people with lots of stories, but
you could do a whole show on it. I imagine.
Probably could.
Yeah, I think one where we just missed the bullet. I was doing closing. It was for a woman who had lost her husband. She was a second wife, and I was about a week from closing, and I got a call from some gentleman who identified himself as the son of the gentleman who passed away. And he said, I just want to ask you, did my stepmother advise you that she was divorced from my father before he passed away? And I said, no. And I went back and I checked the judgment records, and there wasn't a divorce, but apparently it was an out-of-state divorce. It was a long involved
so not
history.
even in this state.
Yeah, so it was one of those ones where we were not going to pick that up. Now, why is that important? When most people own property as a married couple, and one of them passes away, the other one, by operation of law, automatically owns the property. So
Right. I'm
dealing with a widow or widower. I just automatically assume they're the sole owner.
Tenants by the entirety.
Right.
Yeah.
What happens though is once people are divorced, even though the deed shows a married couple ownership, they magically own it at the time of divorce as tenants in common, which means they each own a 50% interest. So in this particular case, the kids of the husband who had passed away, or the ex-husband who passed away, were entitled to half the value of the home.
Right.
And so that's one of those
She
ones.
could theoretically only sell half of the value.
That's all she
property.
owns. So again, a good reason why people buy title insurance, because there are things that a good title company still can't pick up. So I say that probably on a monthly basis we dodge a bullet just because something was brought to our attention kind of at the last moment that didn't look right, and we dove a little deeper and realized that.
Well, and in your example, that how are you going to find that, right? Like, and unless somebody calls you and asks you that, how are you going to find that out-of-state divorce?
Yeah.
It's not here. You're not. Oh my gosh, yeah, that'd be crazy. Well, dodged a bullet is right.
Yeah, absolutely.
Yeah. Okay. Well, how about mistakes people have made? Like an agent or a I don't want to say lender. Michael would never make a mistake, but
You can point fingers. I made a mistake owning up to it.
yeah.
No, I think today your business is a lot different than it was a decade or two ago, and that's because we now have online access to records that we never did.
Yeah.
All land records are now available at mdlandrec.net, at least in our jurisdiction, and out of state, most of them have the same thing. Most real estate agents also have access to business records filed at the State Department of Assessments and Taxation.
Right.
And so, and you also have access to judgment records too. And most agents who are successful realize that that's a very valuable thing to do, just check those records.
Yeah.
But even still today, there's a lot of real estate agents out there who don't check those. And so I have the unfortunate task of calling them to say, yeah, your contract is not exactly correct. You missed that Mrs. Smith conveyed her property into a trust, or you missed a couple of people who are in title because of a life estate deed and things like that.
Or I had one where the listing, I had the buyer, and the listing said conveyed in fee simple. Contract was written up, conveyed in fee simple, and the property was actually a leasehold property.
Yeah. And most of those are just easy softball things that real estate agents today will pick up, but there's still a lot of them that don't pick it up. And so one of my jobs on a daily basis is to call agents and tell them that their contract is essentially invalid and would probably need to be either amended or redone. So that's the kind of mistakes that we see. But thankfully, as the population of real estate agents become more savvy and even younger, understanding that they have access to this information, we're seeing those less and less. But,
Makes a big difference.
but it's still important who you select as your real estate agent.
Well, there you go. Thank you. All right. Well, guys, great information. Any final tips? Any just,
Well, I'd like to circle back to the very first point that you made early on. At the end of the day, under federal law and state law, the buyer has the right to choose a title company.
Yep.
It could be profoundly one of the most important decisions you make. Obviously, who your real estate agent is, who your lender is, very, very important.
it's the triumvirate.
Yeah, but to take a suggestion from a seller, and in this market we have those suggestions all the time because it's a seller's market.
Yep. Right.
Buyers are afraid if they're not going to use the seller's suggested title company that they may not get the deal. But my thought here, and I think we need to go to this as a baseline, the seller is trying to divest themselves of title. Why would you choose a seller-suggested title company?
Right.
This work is far too important. Always talk to your loan officer and your real estate agent. Most of them know who the good ones are on the street, and weigh heavily on their recommendations, not the recommendation of the party trying to divest themselves of title.
Yeah. Amen. Thank you.
I would agree with that.
Yeah. All right, guys. This is great. Thank you, Tom. Super valuable information. We're going to take a quick break. When we come back, we're going to run right into the Unreal and the Spotlight. So we'll be back in just a sec.
Try it.
And we're back to Be Real, the Maryland Real Estate Podcast. I'm Brad Cox with the Vesta Group of Long and Foster, and I have my partner in crime,
Michael Becker of Sierra Pacific Mortgage.
Hey, Michael. And our guest, Tom Drexler, with Sage Title. Phenomenal information you just shared with us, Tom. If anybody's just popping on for the Unreal, you need to go back and listen to what Tom had to say in the scoop, because it was just great information.
So good that I generally interject.
You ask a lot of questions, which is
he was
which
answering
is great,
as
but,
I was thinking.
right?
Of them.
Yeah.
So
yeah.
that's why it's a great guest.
Yeah. So thank you. Yes.
Thank you. It's been a lot of fun.
We saved our voices. It's a beautiful thing. It's a beautiful thing. All right. Well, so going into the Unreal, it's not necessarily real estate related, but it's kind of unreal. It's funny.
Well, it's
The impact that this had
on one country.
On one country.
Inflation we're talking about
Yeah.
nonstop in the real
And
estate
we talk
market.
a lot about inflation on
it's
this
affecting
because it's affecting
mortgage
our
rates.
mortgage rates, right? And so, yes, here's this article that was in the Morning Brew. By the way, neat little daily email if you want to get it. Just snippets of information. It's kind of like Axios. I love getting the Axios mails. Well, Morning Brew's like that too. Anyway, so Thursday's Morning Brew wrote, yesterday, Sweden reported higher than expected inflation for May, causing economists to wonder what could have kept prices elevated. And then it hit them like a ray of sun. Beyonce. Beyonce. It says the pop singer kicked off her Renaissance tour in Stockholm last month.
It was the first concert.
Yeah, okay. 80,000 fans came in over 2 nights, and in response to all that influx of concert goers, hotels, restaurants, they all raised their prices to such a degree that it boosted overall inflation. So pretty crazy. One person can affect sheer force of her popularity. Right?
Hopefully economists and market participants could see that was maybe a one-off.
Oh, really? Yeah, like a blip, right? Although your dullard might comment about it.
Yeah. Cat's out of the bag now, Brent.
Yeah, I know. But anyway. But yeah, so
that's amazing.
So she's coming here next month. Hopefully Jerome Powell isn't paying attention.
I think concert tickets probably are part of core services inflation, which the Fed is looking at.
Yeah.
Has anybody who's gone to a concert recently seen the inflationary effects, especially with the premium pricing, right?
Oh my gosh!
So you got to get a number to go in and buy a ticket, and then within a few minutes, if you're in, there's so much demand, they start having premium pricing on top of it.
Yep.
You could spend $400, $500, $600, $1,000 per ticket.
Yeah, it's crazy.
At a concert these
It's crazy.
days.
So, Beyonce, Taylor Swift, Bruce Springsteen, right? Yeah. So. Thank you guys for damaging our mortgage rates. We still love listening to you, but holy cow. But anyway, that was
kind of unreal.
It was pretty unreal. So anyway, all right. So moving into the spotlight.
Spotlighted places.
Michael.
Near and dear to my heart.
Michael's going to do the spotlight today.
I know plenty of people. My kids have worked there.
Yeah.
I worked there eons ago.
Eons.
Know the owners.
Yeah.
It's I could walk there.
Yeah,
if I wanted
pretty
to.
Close to you.
Not that I want to cross Reisterstown Road, but it's a great restaurant. It's always scores if in the Baltimore surveys and Baltimore Magazine always scores at the top. It's interesting in that it's a combination of a neighborhood joint and a fine dining place or special occasion place.
Yeah, absolutely.
I was there for Father's Day. It was a great time. So a lot of people go there.
We need to tell people who it is.
Oh, we haven't even said it yet?
We haven't even said who the restaurant is.
Linwood's. 25 Crossroads in Owings Mills. It's right off of Reisterstown Road. You make the left on McDonough and a quick right into the parking lot.
Yep.
It's interesting that it's in an office. There's a lot of medical offices.
Yeah, it looks like an office park.
Mostly medical offices in that.
Right.
And thing. But Linwood's, it's been there since 1988. So that's 35 years.
That's a long stretch
time for a restaurant to stay in business.
Yeah.
So they've obviously been doing something.
Them, like Tio Pepe's. Remember we talked about how long Tio Pepe's? Yeah, but good sign. It's been around that long.
Absolutely.
Yeah.
And like I said, it's a neighborhood joint, but it's also a special occasion place. You can go there and get something as simple as a brick oven pizza or a cheeseburger, which is outstanding. Or you can go to the top of the line, pick a sirloin, which I had. That's what I had last night. But some of the other entrees that I love, or they have a Chilean sea bass that's top of the lump crab salad that's out of this world. I always start the meal off with some lobster tempura with a honey butter.
Ooh,
that
sounds.
It is so good.
But tempura, so it's.
That's okay.
What can I eat? I don't know if I.
You could probably be okay.
Okay.
Or it'll taste so good you're just going to deal with the
with the ramifications.
Ramifications later. And outstanding wine list, incredible cocktails.
Yeah.
I'd recommend anybody who hasn't. Most people probably have been there. Go back, but if you haven't, check it out.
Yeah.
You can find them online at linwoods.com.
Yeah. And on Instagram, they're on Instagram at Linwood's Restaurant.
Interestingly enough, if you have the what's that? The table, reserve a table,
open table. Yeah.
You can reserve a reservation there, which makes it really, really easy.
Yeah, I use Open Table constantly.
All the time.
Yeah.
Or you can call them at 410-356-3030. You notice how I didn't
you didn't even have to look at the page.
I remember that number from years ago. So it's been the same number. So if you're in the Owings Mills area, there's no better restaurant than
Beautiful.
Linwood's.
Yeah, beautiful. Awesome. Well, fellas, that's the show.
22 in
22, episode 22 in the books. That's great. So next time, we're going to have another guest. We're going to talk about insuring your home. Top 10 insider tips. We're going to have a buddy of ours come on who is an insurance broker and who can speak to that information. I like bringing on these guests because I think, you and I provide a lot of information, but having those extra perspectives, that, that subject matter expertise, always really
Jeff
helpful.
will have a lot to say about insurance because it's one thing. Go back to the core inflation.
Yeah.
That I was talking, core services inflation. Mm-hmm. One of those things is how much insurance has gone up. And Jeff has great explanations
as to why. Right. Yeah.
And what you can do to save money moving forward.
Absolutely. So anyway, tune in next week. If you want to listen to us on the web, we're at www.berealpod.com. Listen on the site if you want. Leave a comment. Tell us, give us some feedback. We'd love to get some feedback on what you think we're doing right, what you think we're doing wrong, what you might want to hear. So just let us know. You can also listen to us on any of the major podcast platforms, and we're on YouTube. Yes. Search for @BeRealMDPod on YouTube. Please hit that subscribe and like and make a comment. And if you know of anyone who would benefit from the information that we share, please share that out to them. So, fellas, Michael.
Yes. You almost made that cardinal mistake of calling me Mike.
No, I would never now. No.
I'm only kidding.
I would never do that. Oh, my God. In fact, when I introduce people to you, when I send people your way, I say to them, and he is Michael, not Mike.
It's just always been that way. My mom's never called me Mike.
Yeah. Bradford, I was the only person who ever called me Bradford was my mom.
Yeah, but she calls...
But it was always Bradford
so Mark,
Allen.
There's no choice in calling Mark, but she calls David.
Right.
And Stephen was called Stephen.
Yes. Yeah. Yep. So, anyway. Did anybody ever call you Thomas? Thomas was your mother? Like, when you were in trouble, was that it?
Usually.
Thomas?
Yes,
with the middle name, too.
With the middle name.
Yep.
Yeah.
Yeah. Patrick.
But I was Allen. I was Tommy growing up.
Yeah. Tommy. Right.
Yeah.
Yeah. And pretty soon, you're going to have a new name. Tom and I talk about our grandfather names that we're going to pick when one day we have, grandchildren.
Pop,
and so,
what do you want?
I'm still on the fence. Okay. It's because it's an important decision.
All right.
And Tom he's got a great reason why it's an important decision. But anyway, yeah.
That's another whole podcast.
That's another whole podcast. It is. That's
we could go into the depths of how not to select your name, which is to allow your grandchildren to call you, because then you'll come up with Pop or Pops or Pop, or as my brother, who would try to correct his grandchildren and say, "I'm sorry, honey, it's Pop, no S," because they were calling him Pops.
Pop, no S.
Gotcha. They were calling him Pops, and he'd say, "No, it's Pop, no S." And today, by all of his grandchildren, he is called Pop, no S.
That's a good one.
Right? Can't risk it. Gotta pick.
Gotta get out in front.
Yes.
Gotta pick. Although I recently talked to a good friend of mine who become a grandfather, and he said, I couldn't agree with you more. You got to get out in front of it.
Yeah.
I Google searched the coolest grandfather names.
Yeah.
And he came up with G-Dude.
G-Dude.
G-Dude. I like that.
That's got a ring.
The G-Dude.
The G-Dude.
Yeah. The G-Dude. I'm just going to go with simple dude.
Dude's great. Dude's absolutely great.
Or your dudeness.
I've got to come up with something equivalent to dude and G-Dude.
Just Google search it for the next.
I'm going to work on it for the next episode.
Yeah.
Yeah. So tune in again to listen to my chosen. Yeah. I don't know if it ever becomes an issue, but anyway. All right. So let's start with Tom. Somebody needs to reach you, Tom, because they have a question about title work. How did they get in touch with you?
So probably the best is on the internet. Our website, www.sagetitlegroup.com.
Yep.
We have lots of offices. So you're going to select the Baltimore office, the Towson office. But once you get to that office, you can do a drop down and find out the members of that office. You'll see my picture there.
Yep.
And my contact information.
Beautiful. Thank you. And Michael, somebody needs to get you.
Cell phone's always best for me. 443-310-0012. You can always call. A lot of people don't like calling. An introductory text works just fine. Again, 443-310-0012. If you prefer email, you're sitting in your computer listening to this podcast, just type in my name, michael.becker@spmc.com.
Awesome. And if people need to reach me, my cell, 410-375-7550. Call, text, doesn't matter to me, whatever's best for you. And if you prefer email, brad@homesbyvesta.com. So anyway, fellas, thanks again. Episode 22 in the books. We'll be back next week for the next episode of Be Real,
The Maryland Real Estate Podcast.
Thanks for listening.
Try it.